What's going on, everyone? Hope you guys are doing well. So today is the lesson about the market maker model and all what's surrounding market maker model. So we went directly into it. So the first lesson, this will be lessons one inside of the playlist, but on its own, that's not the first. I just recommend this one to be watched before everything else. So let's run directly into it. So the market maker model. So first, let's just tell what is a market maker model and how can we determine the program we are. So our market maker model is either a market maker buy or sell model. So we are either in a buy or sell program. This program is there to engineer buy and sell stuff. So when price is dropping lower or is going higher, all those retracement and stage that I will present later on is just there to create FOMO or anything that retail trader will go in and engineer liquidity with their stuff. That's it. It's simple as that. Market move like that. Institution know what it is, and it work like that. Recognizing where we are heading to on the higher time frame and lower time frame will drastically improve your potential to understand in which stage we are. Price isn't in a buy or sell program every time. What this sentence mean? It's pretty simple. When you recognize the narrative, it will give you more chance to recognize whenever or not we are in a buy model or not. Because the higher time frame narrative will always hold more power than the lower time frame one, meaning you want to look for a continuation inside of this narrative with a buy or sell program. I can promise when you see the initial consolidation or the smart money reversal, you can easily add probabilities inside of your trading. What I mean by that, pretty simple. There is many stage inside of a market maker model, and one of the most important one is, at least what I consider the most important one, is the initial accumulation or the smart money reversal, because it will give you the chance to actually find where is the market maker model. Everything everything will be tell later on what it is, what is a market maker buy model, sell model, what is a smart money reversal. Fractalizing market maker model is another step. But once you understand the algorithm, market maker model can be found in every time frame. So that's just something I had there because it's not like the most important thing at the beginning, but later on it will be super, super important that you recognize what it is. So what I mean by that, I will give an example at the end of this video, but the idea is, let's say we have a 1 hour market maker model, let's say market maker buy model. Inside of the first stage or second stage distribution, you can go on lower time frame and find even lower time frame market maker buy model to support the higher time frame narrative, because a market maker model on the higher time frame will be used as a narrative. Obviously, you don't enter on 1 hour time frame, at least me. So if you follow my model and how I work, you definitely not do that. All right, we're gonna talk about the price phase. It's pretty simple. What I use in price phase is just to understand how price move. At the end of the day, it will give you an insight about how market maker model move. So the initial or original accumulation will be found after certain POIs or drawn liquidity get mitigated. At the beginning, you may not see the accumulation, but when time comes, the dealing range will form higher high and lower low and just generate buy and sell stop, like I said in the beginning of this video. So like we see there, daily chart, that's a yearly power of three. This, I will talk about the power of three in the next video. You probably see it, it's a lesson 2. So as you can see, pretty simple. We are just creating higher high, lower low, and pretty much range. Super simple, nothing much to say about it. The second phase will be the expansion phase. The expansion phase will simply be when price leave a certain level quickly. It's an impulse swing. That's what I mean by that. It's just quick move, aggressive displacement, whatever you want to call it. That is made to reprice the current model or program you are currently trading. So you see, we leave the original accumulation and we directly expand. We expand with impulse move. Something important. We quickly move lower inside of this chart. Now we're gonna talk about the retracement being the phase 3. So a retracement simply when price come up or down to rebalance its previous range after taking out significant drawn liquidity or key level. So as you can see there, it was the distribution leg I talk about, but at the same time, if you look, price come up, rebalance its range, fill the weekly CB, and drop lower. What we do after that? So that's a retracement, obviously. We took out the significant drawn liquidity, being probably previous week low or almost previous month low, because that's a daily chart, and we retrace to OTE of this range and dump. That's it. Finally, the last phase, it's the reversal. So reversal, it's super similar to retracement. The only big difference would be that a retracement is made to rebalance the previous leg inside of the same program, and a reversal will be there to create a program in the opposite way. Pretty simple, like you see. Retracement, we retrace into the same program and dump, retracement, dump. Now, similar, we retrace originally, but we form a buy program right after that. And that's what we call the smart money reversal. So why I didn't talk about the first stage accumulation, reaccumulation, distribution, redistribution, and everything is that the market maker model is just surrounding these four phases. So we're either retracing to go finish the program. We either have a smart money reversal being the phase 4, a retracement, or the initial accumulation. That's a market maker model. So I put a bit more emphasis about the smart money reversal because that's something really, really important. You need to understand that. So I put a bit more about it. So the smart money reversal, I have it on section, like I said, just because you need to understand how, why, and when it works. So first, something important with the smart money reversal will be the narrative. Super important. Probably the most important thing. The reversal doesn't happen at random time or place. To understand real and significant reversal, you must understand where we are on the chart. If price is clearly bullish, you will not look for a bullish signature to get mitigated, to then catch an SMR, a smart money reversal towards a sell program. You'll focus on market maker buy model internally to stay in favor of stay in favor of those conditions. I made a mistake there. I'm sorry. If price is clearly bullish, you want to look for a bullish signature to get mitigated. I'm sorry about that. As you can see there, that's a market maker buy model. That was last year yearly power of 2. So we accumulate first stage distribution, accumulation, whatever you want to call it, done. And then right there we have an SMT with the previous year low, meaning we have a significant PD area that I will talk about just after that. And the important thing is that we mitigated bullish PD area, bullish signature, making price retrace higher, expand higher because we made new all-time high with that. But the idea is that, we are bullish overall. On the higher time frame, the 4 years time frame, we are bullish. So if you're looking for a market maker buy model on the daily chart or something, it will depend on the time frame, but that's for your own study. You really want to look for bullish signature inside of your price action. After that, we have the PD arrays and the key level. So smart money reversal would appear either at a significant key level PD array, NWOG, NDOG, volume imbalance, previous week low, previous daily low, previous month low, previous year low, whatever, previous something low or high, and any PD array that can support the current narrative. So it can be a 1 hour order block, can be a 1 hour PD array. Just follow the time frame alignment that I will talk about after. Finally, something super important, the cracking correlation. The only thing you are missing to fully validate reversal are SMTs. To add more precision, I personally use sequential SMT. This video is about sequential SMT, if you want to understand it. And you will understand how to use it by finishing the playlist on my YouTube or in the WAP, depending if you are inside of the inner cycle. Just something to clarify there. I teach SSMT, so sequential SMT, but I don't teach them in depth, meaning I will not use for reference the narrative with sequential SMT because that's something super powerful, and I think everyone needs to pay for that, and I paid for that, so I'm expecting people to pay for this information, but I'm giving out what it is, how it works, and everything. I just don't put the narrative beside it. So price phases inside of a market maker buy model or sell model. Here it's a buy model. Now that you understand all those phases, you can understand everything inside of this chart. Like I said, we have the original accumulation there. Sorry, yeah, original accumulation there is, or initial consolidation, whatever, is where you want to recognize we are currently forming a model or program. First stage accumulation being a retracement, then an expansion. Second stage being the same thing. And then the smart money reversal. Like I said, we hit a key level, we swept something, we fill something, we mitigate something. Should have an SMT there on this example, but that's not super important. We have the sell side of the curve and the buy side of the curve that will slowly make its way up to the initial accumulation high, being in this example sell stop engineer for buyers to fill this. After that, we have the time frame alignment. So inside the market maker buy model, you have a time frame alignment to follow that ICT teach. If you follow that, you will have the higher probability trade. If you don't, that's up to your own study. But if you want something like an advice, don't do it. Your trade may be lower probability. No, that's something important. You can do it. I mean, you can. It's just up to your own study. You need to study it and understand why it worked, why it didn't. I personally never do that. I just follow the time frame alignment. So the time frame alignment goes like this: monthly PDRA, daily market maker model; weekly PDRA, 4-hour market maker model; daily PDRA, 1-hour market maker model; 4-hour PDRA, 15-minute market maker model; 1-hour PDRA, 5-minute market maker model; 15-minute PDRA, 1-minute market maker buy model or sell model, whatever. So it's pretty simple. I will give an example after this. I just want to clarify something. I personally use the QT, so the quality theory market maker model time frame alignment. It's the exact same thing as my first lesson on quality theory, that if you follow this order, you will understand it in 1 or 2 video logically. If you didn't and you just want to skip to that, it's the lesson 1 about the quality theory. It's the time frame alignment of quality theory, meaning if we have, I mean, it's up to your own study. Just look at my video, and if you don't understand, that's why I create inner cycle. It's for people to learn about this more in depth, because that's kind of complex just with YouTube information. Now, finally, we have the market maker dissection. So I just dissect 2 examples to make sure you guys understand what is a market maker model and how to utilize it. So So like we shown over there, we have a daily market maker model inside of a yearly power FT. So let's just quickly what we see on the chart. You see, like nodes, every stage, everything. And now let's just dissect it. Pretty simple. So Q1, January to March, price was accumulating, generating buy-side liquidity for institution to take place later on. As you can see, right there, the high is generating sell stop. In March, price was in a distribution phase, delivering towards lower prices. This gave the confirmation that, of a sell program, engineering liquidity for later on buy program. as you can see in the picture, we got a solid displacement. We retrace, so the phase I talk about, retracement, engineering buy side liquidity, and then drop, confirming the market makers, the sell program for the market maker buy model. After that, first reaccumulation phase, price fall into a retracement phase, reaching a weekly CB before distributing lower. What I just talked about over there. After that, once YM reached the previous year low, price stopped dropping and start giving the smart money reversal. What will really confirm the smart money reversal will be the cracking correlation at the bottom of our power of 3 or market maker model. NQ never took the previous year low, meaning we have some sort of sequential SMT or SMT with the low that get mitigated on other indices, meaning it can confirm the market maker buy model because we have a cracking correlation at the low. We need to have some sort of divergence between the smart money reversal on 3 indices, so ES, YM, and NQ. Finally, price start distributing higher prices, confirming the yearly bullish distribution before clearing all the engineer high made during the sell-off. So that was the example for the yearly power of 3 and the daily market maker model. Now, when I talk about the fractalizing market maker model at the beginning, that's exactly that. This is a 1 hour market maker model, fractalization of the daily market maker buy model right there. So we will be utilizing the stage 2, this stage right there, to understand the 1 hour market maker model. So before price falling into the second stage distribution of our daily market maker buy model currently, price started accumulating. Same idea, same process. So before retracing, we start accumulating. We generate buy stop, buy stop, buy stop. This market maker buy model is kind of weird, but it works. It's just not perfect every time, not textbooks. Need to understand it. Once a significant time-based or structure-based POI is mitigated, price start distributing low. So I don't exactly know here, but this is the first stage. We come up, sweep the internal high, generate more buy side liquidity right there, and then start distributing lower. So first stage and the second stage, again, we engineering buy side liquidity, referring to our higher time frame narrative being clearly bullish. Now that we know we have a smart money reversal there. The smart money reversal appear, again, we have a cracking correlation at the lows and price reach the daily BC that will be utilized to form the second stage of our daily market maker buy model. So as you can see here on our daily chart, price fall, drop, and mitigated the bullish fair value gap on the daily chart. On the 1 hour chart, you can see we fill it, and using what? The time frame alignment right there. You will use the 1 hour for the daily PDRA. So here we got this smart money reversal. The daily BC has been filled. So we have the PDRA, we have the aligned narrative, and we had a cracking correlation because I think YM didn't fill it, or ES, I don't remember. So we have everything to have a clear and clean smart money reversal. So we start distributing, and first and second stage distribution until we reach the original accumulation right there. So the last thing, market maker model will be super high probability once you study the fractal side of it. So you have the daily market maker buy model currently on the higher time frame, and once we reach the daily BC, we have a 1 hour market maker buy model, meaning the distribution will be even stronger because it's sponsored by the higher time frame. So now I didn't do an example, but you can probably go inside of the stage 1 and see something on the, I don't know, maybe 15-minute, 5-minute time frame. And this is exactly what I'm trying to trade every single day. There's no market maker buy or sell model every day that you will take, but there is definitely something many times And that's why market maker model is super important if you want to go further into quantity theory. So I hope you guys like this little lesson. It's super important to understand quantity theory. I know it's kind of boring, but you need to understand that. If you need this note, just to remember, you can just go in Discord and just write me or tag me in the chat, or just, yeah, do that and I'll send it. It's completely free on my Discord. There's nothing to pay that. No, it's completely free. So I hope you guys liked it, and I'll see you guys in the next lesson. See y'all.